Before the ringing bells of Wall Street, before paper stocks and glowing tickers, there were harbors. And in those harbors, long before skyscrapers and suits, men placed their fortunes not on land, but on the sea. Athens, 5th century BCE, a city of marble, democracy, and daring, where every ship that set sail carried more than cargo. It carried investment, it carried risk, it carried the hope of a people who believed profit could build a nation. This is the story of the world's first stock market, a story buried beneath centuries of sand and forgotten by time. But make no mistake, what happened in ancient Athens would echo through millennia, shaping every financial system that followed. Welcome to the Emporion, the trading hub where democracy met capitalism, and where ordinary citizens became something the world had never seen before: investors. Picture the Piraeus harbor on a spring morning in 425 BCE. The sun breaks over the Aegean, casting golden light across hundreds of ships. Triremes loaded with grain from Egypt, merchant vessels heavy with olive oil bound for the Black Sea, smaller boats carrying wine, timber, silver, and slaves. But standing on those docks weren't just merchants and sailors. They were bankers, investors, risk assessors, men who'd invented a system so sophisticated that when economists rediscovered it in the 20th century, they could barely believe what they were reading. The Athenians had created something revolutionary. They called it the maritime loan, and it was essentially the world's first derivative contract. Here's how it worked. A merchant needed capital to fund a voyage. He would go to the Emporion and find investors willing to fund his journey. These financiers would loan him money, sometimes enormous sums. But here's the brilliant part. If the ship sank, the investor lost everything. The merchant owed nothing. This wasn't just a loan, it was insurance. It was venture capital. It was futures trading, all rolled into one contract. The interest rates reflected the risk. A safe journey might command 20 to 30% interest. A dangerous winter voyage to the edges of the known world, rates could exceed 100%. These were calculated risks by financial minds that understood probability, diversification, and return on investment. 2,400 years ago, Athenian investors were using the same principles taught in business schools today. They diversified across multiple ships. They assessed seasonal risks. They hedged their bets. They created syndicates to pool capital. They had invented modern finance. But who were these investors? That's where the story becomes fascinating. Unlike the exclusive banking houses of medieval Europe, Athens' financial system was remarkably democratic. Yes, wealthy citizens played a major role. Men like Passion, who started as a slave, earned his freedom, and built a banking empire. But the system also allowed ordinary citizens to participate. A potter who had saved a modest sum could invest in a voyage. A small landowner could diversify beyond agriculture. This was revolutionary. In most ancient civilizations, investment was the domain of kings and aristocrats. But Athens had created a financial commons where citizen investors could pool risk and share reward. The Emporion became the beating heart of this system, a sprawling complex of warehouses and counting houses where merchants displayed cargo, money changers converted currencies, and scribes drafted contracts in precise legal language. And behind it all was trust. The entire system depended on Athens' legal framework. Contracts were enforceable. Disputes went to specialized maritime courts. Documentation mattered. The Athenians had figured out something essential. Commerce requires certainty, and certainty requires institutions. One specific case illuminates how sophisticated this system had become. A merchant named Lucretus borrowed money for a voyage to the Black Sea. The contract was specific: purchase goods in the Bosporus, return to Athens, and sell them at the Emporion. But Lucretus was a fraud. He bought cargo, sold it at a different port, then claimed his ship had sank. Under the maritime loan terms, that would absolve him of all debt. The investors took him to court. The prosecution speech, delivered by Demosthenes, Athens' greatest orator, reveals the system's inner workings in remarkable detail. It described inspection processes, cargo verification, and networks of agents who could testify to a ship's actual fate. What emerges is a portrait of a system with checks and balances. Investors conducted due diligence. They required collateral. They demanded witnesses. They built information networks. They were, in every meaningful sense, modern investors. The court sided with the investors. The system continued, strengthened by legal precedent. Why Athens? Why did this city-state create the world's first sophisticated financial market? Geography. Athens sat at the crossroads of Mediterranean trade routes. Politics. Democracy needed money to pay citizen soldiers and fund public works. Necessity. Athens had to import 2/3 of its grain. Commerce wasn't optional, it was existential. There was also silver. The Laurian mines provided enormous wealth, but that silver was most valuable when it financed trade. And there was war. The Peloponnesian War created economic pressure and opportunity. Investors who could fund merchant ships became essential. Finally, there was Athenian character, a culture that celebrated cleverness, innovation, and calculated risk. The same habits that produced Socrates also produced financial instruments that wouldn't be reinvented for 1,500 years. But this wasn't perfect. Maritime finance was high-risk gambling with devastating consequences. The system reinforced Athens' dependence on slavery and empire. Much of the profit came from exploitation. Yet even acknowledging those truths, we can't ignore the innovation. The Athenians created a democratized system of investment that allowed risk to be priced, shared, and managed through voluntary contracts. They invented the fundamental architecture of modern capitalism. So what happened? Athens lost its war. When Sparta defeated Athens in 404 BCE, it shattered the city's naval power and commercial dominance. Other cities tried to replicate the system, but the unique combination of democracy, legal sophistication, and commercial necessity that made Athens special never quite came together again. The knowledge wasn't completely forgotten. Medieval Islamic scholars studied Greek commercial practices. Italian Renaissance merchants rediscovered ancient maritime contracts. The ideas went dormant, waiting for circumstances to bring them back. When European explorers began crossing oceans in the 15th century, they recreated what Athens had pioneered. The Dutch East India Company, British joint stock corporations, Lloyd's of London, all of them were walking paths first cleared by Athenian merchants 20 centuries earlier. Here's why this matters today. We think of financial markets as modern inventions, but the fundamental principles, risk assessment, diversification, legal enforcement, democratized investment, were worked out on the docks of Piraeus more than 2 millennia ago. Those Athenian investors understood that progress requires risk, that innovation requires capital. They also understood the dangers, that greed corrupts judgment, that fraud needs prosecution, that the system only works when people trust it. Every financial crisis, every market bubble, every regulatory debate today echoes conversations that happened in ancient Athens. When we debate financial regulation, we're asking questions the Athenians asked. How do we encourage risk-taking while preventing fraud? When we design derivative contracts, we're refining tools they invented. When we create legal frameworks for commerce, we're building on foundations they laid. Picture that harbor one more time. The sun setting over Piraeus. Ships returning with goods from across the known world. Investors gathering to collect returns or absorb losses. Merchants preparing for the next voyage. They didn't call it a stock exchange. They didn't have electronic tickers, but they had something more fundamental. A system that allowed strangers to trust each other with capital. That enabled ordinary people to share in profits. That made it possible for a small city-state to become a commercial empire. They had the idea, and ideas never truly die. The maritime loans of Athens live on in every investment portfolio, every insurance policy, every venture capital fund. The principles those ancient merchants worked out became the bedrock of the modern global economy. Before Wall Street, before the London Stock Exchange, before Renaissance merchant banks, there was Athens. There were men standing on docks, betting their fortunes on ships they would never sail, trusting that somewhere across the wine-dark sea their investment would return. Sometimes it did. Sometimes it didn't. But every time they tried, they were inventing the future. The story of Athens' stock exchange isn't over. It continues every day, in every market, in every investment, in every risk taken and reward earned. It began with harbors and ships, and men willing to bet on possibility. It began in Athens, and it never ended.